November 24th edition of Market Trends Podcast. Today we have the September jobs report, Matt. What will the Fed do in response? They meet at the end of December. We discussed that. Also, the NAR had a big meeting. They have kept more agents than they thought. And then finally, Cook County releases a new price tracker. Coming right at you. Market Trends. Matt, let's toggle then into the Kaempf versus Zillow injunction hearing and what went on there, because there's some news that can impact everybody.
Yeah, this is interesting. So last week, real estate news turned to this high-profile courtroom showdown between Kaempf and Zillow. We've been talking a lot about them. So last week, there was an injunction hearing, and the dispute is whether Zillow can continue blocking certain Kaempf listings on its platform, and the lawsuit Kaempf filed back in June. So this is a preliminary hearing. Robert Reffkin was deposed and on the stand, and here's some things that I think are interesting that will be impactful moving forward. So number one, the us versus them theme. Robert Reffkin framed the conflict as agents and Kaempf, quote unquote, the workers, versus the portals, NAR, and MLSs, the takers. Zillow profits from agents' works. Reffkin argued that Zillow monetizes homebuyer clicks without agent involvement, calling it the most expensive click in real estate. That's a good one. And I would say we said this many times over the course of our episodes. Zillow has monetized every part of the transaction and are capturing 80% of the profits these days.
Yes, 80%. They got their hands on 80% of the transactions. They're taking sometimes up to 40% of commissions on these clicks, so it is an expensive click, Matt.
Yeah.
So kudos to Reffkin for pointing that out.
You know, Kaempf claims that the MLSs out there and NAR, that they limit agent choice via the mandatory rules and monopolistic control over listings. We're going to see what happens with that. As we reported last week, NAR came out with this whole new revised MLS policy, which puts the burden on local MLSs to take them out of the competitive nature of all these lawsuits. So more to come on that. The three-phased marketing strategy. So Kaempf's strategy that includes the first phase, which isn't truly private. Buyers and agents can access listings through Kaempf offices. But then the Zillow ban impact, Kaempf agents fear suggesting the three-phase marketing effort because listings could be blocked by Zillow. And Reffkin says many brokers are similarly intimidated.
Matt, and I think there's something to this on the other side of the coin, which is that most brokers, I think 80%, 8 out of 10, including Anywhere, were for clear cooperation. So Reffkin clearly is trying to still petition, even though he's pivoted with now he's the little guy all of a sudden, although he's almost 30% of the market, that the private listing is part of a overall strategy for them to sell the property, and he wants to be able to use the private listing and as well leverage the Zillow platform.
Yep. And so on cross-examination, this is fun, Reffkin admitted uncertainty on online market share in the three-phase marketing strategy, questioned on financial harm despite Kaempf's record Q3 earnings, and Zillow's emails indicated early discussions on black box listing challenging Reffkin's claim of unfair standards. So I love lawsuits, I love depositions, I love people, he said, she said. What they throw out there in the media is usually different than what comes out in court proceedings, because when you're on the trial and on court, you actually have to tell the truth.
Yes.
As opposed to throwing out the PR machine and saying this, that, and the other. So more to come on this, but this could impact what's happening in our marketplace.
And we're going to keep our violins in the case right now because Kaempf has record earnings and Zillow has had record earnings, even though they're now tangled up in what I would say is a very serious lawsuit for them with these kickback schemes and all that kind of thing. So more to come on that. Matt, let's take a look at the mortgage rate snapshot and then go into some U.S. existing home sales data.
Yeah, so because we're near the end of the month, this is our time where we talk about what's happening in the mortgage market as well as what's happening in the existing home market.
Yes.
So first and foremost, the market mortgage snapshot, it's been pretty flat this month. I mean, it's ticked up ever so slightly from the last time.
An eighth here or an eighth there.
So for a 30-year fix, we're looking at 6.25% on average, and it could be a little lower, could be a little higher, but around that market time, that rate, which has really driven a lot of refis.
Absolutely.
You know, those people that are in the 7s and maybe even 8s, they're coming to the table and refinancing at this point in time at 6.25.
They dated the rate, Matt.
They definitely dated the rate. And 15-year fixed is averaging about 5.6% right now. So that's the mortgage snapshot. We'll see what happens as we just discussed with the next rate cut. I don't think there's been really movement one way or another over the last few weeks. So we'll see what happens.
More to come.
And then moving forward with the U.S. existing home sales data. So last week was when everything came out from NAR and the local boards and associations. So on the U.S. marketplace, existing home sales rose just over 1.2% month over month to a seasonally adjusted rate of 4.1 million units.
So flat, Matt.
Flat. Look at a 3-year chart. It is 4 million, 4 million, 4 million. That's how we're going to end up the year. Year-over-year sales were up just 1.7% compared to October of 2024. Median home sales price in October was $415,200, up just over 2% from a year ago, and that is the 28th consecutive month of year-over-year price gains. Crazy.
Matt, and I believe that this is part of it is what's stirring the conversation about affordability. It's hard to have you're excited about appreciation. At the same token, if you're on the outside looking in, you're thinking homes are getting more and more expensive. And so I think that just makes an argument for when is the best time to buy? Yesterday, but we can't do yesterday, so let's do today.
Yeah.
Let's talk about inventory and supply.
So inventory is at 1.52 million units, which is actually down 0.7% from September, but up almost 11% year over year. We're at a 4.4 month supply of homes at the current sales price. For equilibrium, we're shooting for 6 months. We have not seen 6 months supply in years.
In a long time.
In the Midwest, sales are up 5.3% month over month and just over 2% year over year, with a median price of, I'm going to say $320,000, which is just under 5% year over year.
Matt, who's buying these homes?
So first-time buyers made up 32% of sales in October, which is up from 27% a year ago.
That's a
good sign.
Yep.
Cash sales accounted for 29% of transactions, up from 27% a year ago, and that's been pretty flat for this entire year. It's been averaging 25 to 30% cash sales because people who have equity, or people like you, Steve, which is deep pockets,
yes,
just checks to write.
Absolutely. Just come with the bags of cash to the closing.
Yep. And another good sign is the distressed sales, which includes foreclosures and short sales, remained at 2% of the total pot of things. So there is no red flags, even though in certain market areas, such as in Florida, Texas, and California, foreclosures are rising slightly. But us in the Midwest, because we're simple, easygoing, smart, financial people, we're not seeing that at all.
No.
And then median time on market is 34 days, which is up from 29 days a year ago. So time on market going up a little bit.
Yep.
Nationwide. And Lawrence Yun, our favorite chief economist, said home sales increased in October even with the government shutdown due to home buyers taking advantage of lower mortgage rates. So that's where we're at with the U.S. home sales.
And Matt, it's also this little note here that rents are coming down, and that's in some markets. And I think, with the competition is getting out there, maybe there's some more vacancies for various reasons.
Yeah.
And so all of a sudden people are going to have to be more competitive on the rental front. And so that's exciting for renters.
Anecdotally, I was with a very good friend of mine from Pittsburgh yesterday. He's a home builder, and he was saying that the condo market in downtown Pittsburgh is actually, on a square footage basis, more expensive per square foot in Pittsburgh than it is in downtown Chicago right now.
Wow.
Because the condo market in downtown Chicago has taken a slight hit. If you haven't seen that, there's a glut, and a lot of people are unloading properties at lower prices than they paid.
Matt, and I did see recently, although Chicago's the #1 best big city, I think Pittsburgh was listed as
one of the most affordable.
One of the most affordable
larger cities
larger
out there.
cities.
Quality of life, lots of opportunity. Pittsburgh's a lovely city.
Well, Matt, and more than likely, I don't want to get ahead of ourselves, but people are moving out of Pittsburgh because they just lost to the Bears.
I mean, it's a tough
Yeah,
sell
you don't
to
even.
stay.
You're moving to Chicago thinking, "Hey, I want to go with a winning team." But Matt, speaking of Chicago, let's go to the Chicago metro area.
So looking at October month over month as well as year over year, the operative term is flat. So closed sales, it's year over year just a 2% positive change. But if you look at the numbers, it's 150 more units year over year.
So very much like last year, Matt.
You know, median sales price, once again, is higher than ever, almost $370,000 from $350 a year ago. Inventory of homes is down almost 7%. So in certain parts of the country, there's inventory being added on a daily basis. Not the case here in the Chicago marketplace, where inventory is actually down year over year, which is causing prices to accelerate.
That's
and
right.
we've talked about so many people delisting because they don't get the price that they're looking for and don't need to move. And then days on market is flat year over year, 24 and 24.
Matt, let's shift to Wisconsin, the land of the cheese.
Wisconsin, once again, all positive numbers for the most part. Home sales is up 3.4% year over year, but that's like 200 units. Statewide listings for the state of Wisconsin are up, but that's by 400 units, 1.7%. And then the median home price year over year is up almost 7%. So for October, $331,500, which is about $20,000 more than last year. And then inventory actually is lower year over year. So we're at 3.9 months inventory this time period versus 4 last year.
So the Wisconsin market is still strong, Matt. Matt, let's get into the other news. Are there any highlights here?
So for those of us that live in Cook County, your tax bills have arrived, so don't forget to pay them.
Yes.
It's about 2 months behind. So
But they want their money now, Matt.
they want it by December 15th.
Okay.
You're not in Cook County,
No,
correct?
I'm not. Yeah.
Congratulations.
Thank you.
Do we want to do a little recap of
The cash flow conference,
yeah.
Matt?
So the cash flow conference, did you go all 3 days?
I did go all 3 days.
That's very good. So the cash flow conference, which is the Andrew Holmes event that they do 2 to 3 times per year. I mean, how many people they had there? 500-600 people at least?
Yes, and many, probably 1,000 if you include the online guests.
So we are a trusted partner with Andrew Holmes and his team on the title side of business. And so we were guests, and many of us on our team were able to participate on the cash flow conference. And I thought it was the part that I was able to attend was outstanding, showing you how to find listings that were in the MLS as well as off MLS listings, and things to look for with financing. I know they did a bus tour of some of the investment properties that are out there that are currently as part of their network. And on the day 3, I think they brought it all together.
They did.
With how to find it, finance it, and then hold it and protect yourself with insurance, trusts, wills, probate.
Yeah, Matt, and what I really liked about the conference is that every single serious-minded investor had the opportunity to leave with a plan of how they can get involved and really achieve their first investment property. The whole concept is, 257.
Right.
Build your portfolio, pay it off within 7 years, and build your real estate equity and net worth.
Yes.
Very good.
Very cool.
Yeah, and Matt, we have a big Bears win. I alluded to it, but we did not linger on it long enough. We're 8-3 now. We're alone at the top of the NFC North.
Yeah.
Right.
Yeah.
And dare I say, Matt, we're a legit team.
Legit. And for the first time in many years, I was in person and went to the Bears game. So thank you, Marty.
So the energy was real, Matt.
Energy was real. I was saying to Steve earlier, about 20% of the stadium were Pittsburgh fans with their stupid, terrible towels, which I said to my colleagues from Pittsburgh. I said, why do you guys have these terrible towels? But they love them for some reason.
Yes.
It's part of their DNA. And I have no problem with Pittsburgh. They're a great
No,
franchise,
it's fun.
historical
Yes.
franchise. Everybody was getting along lovely in the stadium. I said to the young man next to me who was from Pittsburgh, I said, we have no animosity towards Pittsburgh.
Right.
We're not really a rivalry. We never play you
Midwestern,
guys.
good, hard work in
Right,
town.
we never play you guys. You guys were respectful. So
Yes.
the fans there, hopefully everybody enjoyed themselves, but it was another nail-biter, cardiac win for the Bears.
Man, and it's a lot easier to leave with your terrible towel when you lost.
Exactly.
Now, if they would have won, it might have been flipped the script. I don't think so. But anyway, congrats to the Bears. We play Philadelphia Friday, Matt.
And Philadelphia's, they're ready for, they lost.
They're ripe for the picking, Matt.
They are ripe for the picking. So I'm bullish on the Bears. Why not?
Absolutely.
So I stand corrected on my win total. They've already exceeded the win total.
Yes.
I think I said at the beginning of the year. I don't know if I said 7 or 8 wins. But nothing but good things ahead, man. They just keep winning these nail biters. So.
Yep, we have 6 games, Matt, including 2 with Green Bay.
Yeah.
Should be exciting. So listen, we wish everyone a happy Thanksgiving.
Yes.
We have a lot to be thankful for in this country and in the world, Matt.
Yeah. So grateful for you guys. Enjoy this week. As Steve said, catch up on your market trends and People Not Titled's past episodes.
Absolutely.
When you get bored, you see your family enough. You're going to get bored with them.
Yes.
Take your second plate, a turkey, and go to the computer and check us out.
Absolutely. People Not Titles podcast, the Market Trends edition for November 24th, 2025, signing off. Hey, thanks for listening to the People Not Titles podcast. We are proudly sponsored by Land Trust Title Services. If you enjoyed the podcast, please hit the like button. Please subscribe, and we'd love it if you'd share our podcast with your friends. Thanks a lot.